Hello and welcome back. We're looking at Blackstone's first quarter 2025 results today.
Yes, and they kick things off pretty strongly.
Definitely. Let's start with the inflows. The numbers are quite impressive. Total inflows reached $61.64 billion.
Yeah, that really stands out, especially when you compare it to the estimate. What was that, around $45.8 billion?
Exactly. $45.79 billion was the estimate, so a huge beat there.
And that pushes their assets under management, their AUM, to a new record, right?
It does. $1.17 trillion. That's also ahead of the $1.15 trillion projection.
Incredible scale.
It really is. And folks, if you're finding this sort of analysis useful, do give us a like and subscribe. It helps us bring you more content like this.
Absolutely.
Okay, so let's maybe drill down into some key performance indicators.
Sure, how about distributable earnings?
Good place to start. Distributable income per share came in at $1.09.
Okay, and the estimate was $1.05, so slightly better than expected there, too.
Just a bit, yeah.
Yeah.
Consistent. And total segment revenue. That hit $2.76 billion.
Which, again, is above the $2.63 billion expectation. Seems to be a theme.
It does. Fee-related earnings followed suit, $1.26 billion.
Compared to an estimate of $1.24 billion. So, again, just edging it out.
And the last one on this list, fee-related earnings per share was $1.803.
And the prediction there was $1.02. So ticking all the boxes, just slightly ahead across the board on these core metrics.
Pretty much. It paints a picture of, well, solid execution.
Definitely. Shall we look at where that record AUM is sitting, the different segments?
Yeah, let's break that down. Real estate first.
Okay. Real estate assets came in at $319.99 billion.
So basically, right on the money. The estimate was $319.99 billion. Very close.
Very close indeed. But private equity, that showed some more significant movement.
It did. $370.99 billion there, and that's a 16% jump year over year.
16%, wow. And well above the $360.16 billion estimate, too.
A really strong point. How about multi-asset investing?
That also saw decent growth, $87.76 billion.
Which is 12% up year over year, right?
Correct. And again, ahead of the forecast, which was $84.91 billion.
Okay. And rounding it out with credit and insurance.
That's the largest segment now, isn't it? $388.72 billion.
Yeah, it is. And that's a huge 21% increase compared to last year.
21%. That's substantial growth and just slightly above the $388.39 billion estimate. Strong performance across the board, really.
It seems so. Growth in pretty much all key areas.
So with all that capital, let's talk about what they were actually doing, the investment activity.
Right. On the outflow side, we saw $13.86 billion for the quarter.
Okay. Understandable as part of the cycle. But what about firepower, the dry powder?
Still significant. $177.2 billion available for future investments.
That's a lot of capital ready to be deployed. Speaking of which, how much did they deploy?
They put $36.4 billion to work in new investments during the quarter.
And that's more than expected, right? The estimate was closer to $30.7 billion.
Yeah, $30.68 billion was the estimate. So they were quite active on the deployment front.
And realizations, taking profits.
They realized $25.5 billion from existing investments.
Okay. And net realizations.
That came in at $357.0 million for the period.
Got it. So busy on both sides, deploying capital and realizing gains.
Exactly. Now, let's talk shareholder returns. Always important.
Of course. Dividends?
They declared a quarterly dividend of $0.93 per common share.
93 cents. Okay. And the payment date?
Payable on May 5th, 2025 for anyone holding shares as of April 28th.
Standard timeline there. Any share buybacks?
Yes, they repurchased 0.2 million shares during the quarter. Not huge, but it's something.
And they still have authorization for more?
They do. As of March 31st, they had $1.6 billion remaining under the current share repurchase program.
So returning capital through both dividends and buybacks.
That's the plan.
Yeah.
Now, shifting gears a bit, what are the analysts saying? Smart Karma had some interesting points, particularly on real estate in Asia Pacific.
Ah, yes, that's been a focus area. They seem quite bullish on activity there, right? Japan and Australia specifically.
They mentioned several deals, Warburg Pincus making moves in Japan and India, including that life sciences JV in Tokyo.
Right, with Eastgate. And Greystar's big student housing acquisition in Australia. That was $1 billion, wasn't it?
It was. Also noted Rava bringing in Blackstone MDs to help with growth in Japan.
Interesting. And collaborations, too, like Greenfort and GAW looking at land lease opportunities down under.
Yeah, in Australia. And finally, SC Capital successfully closing that $900 million APAC fund. So lots of activity confirming that regional focus.
It certainly paints a picture of a dynamic market there, and Blackstone is right in the mix.
What about Smart Karma's specific scores for Blackstone itself, the SMART scores?
Right. Those provide a sort of synthesized outlook. The overall score was 3.2, which they classify as somewhat mixed for the long term.
Mixed, but weren't some individual scores strong? strong?
Exactly. The dividend score was a 4, which is strong, suggests confidence in continued payouts.
Okay, that makes sense given the dividend declaration.
And the resilience score was also a strong 4. That points to a belief the company can handle economic headwinds well.
Resilience is definitely key in this environment. What about the others?
Value was moderate, a 10. So perhaps suggesting the stock isn't seen as particularly cheap right now.
Fair enough. And momentum.
Also moderate, a 3, indicating the stock price momentum isn't exceptionally strong currently.
And growth.
Growth potential was also scored a 3, moderate. So potential for expansion, but maybe not explosive growth expected based on this metric alone.
So a nuanced view from those scores. Strong on dividends and resilience, moderate elsewhere.
Pretty much. It suggests stability and income potential, even if value and momentum aren't top scoring right now.
How does Blackstone stack up against peers? Zacks Equity Research had some comparisons.
Right. Always good to see the context. Blackstone's distributable earnings, that $1.09 per share we mentioned,
Yeah.
that beat the Zacks consensus estimate, which was $1.04, and it was up 11% year over year.
Okay, solid beat in growth there. And revenues.
Same story. The $2.76 billion in total segment revenues beat the Zacks estimate of $2.64 billion. And that was up 8% year over year.
Good consistency. And the AUM growth compared to peers.
So Blackstone's $1.17 trillion AUM was up 10% year over year, driven by those big inflows. Now compare that to, say, BlackRock.
BlackRock also reported Q1.
Well, they did. Their adjusted earnings were $11.30 per share, which beat estimates and was up 15% year over year. And their AUM hit a staggering $11.58 trillion.
11.58 trillion. Even bigger scale. Shows the whole sector is doing well, perhaps.
It suggests a positive environment for the major asset managers, certainly. We were also waiting on Invesco's results around April 22nd.
And the expectation there.
The estimate was for an 18.2% year-over-year earnings increase. So if that materialized, it would add to the picture of broad strength in the industry.
Interesting context. So summing up Blackstone's quarter?
I'd say it was clearly strong. Significant inflows, record AUM, growth across the main business lines.
Yeah, and that profitability is feeding through to dividends and allowing for continued investment, both realizing gains and deploying that dry powder.
Exactly. Analyst sentiment, especially regarding that Asia-Pacific real estate angle, seems positive.
Though the Smart Karma scores offer that slightly more balanced long-term view, highlighting the solid dividends and resilience, but maybe cautioning on immediate value or momentum.
Right. It's not all uniform, but the core strengths are definitely there. And seeing peers like BlackRock also post strong results suggests the industry tailwinds might be favorable.
It provides a good overall picture. Looks like a solid start to 2025 for Blackstone.
Agreed. Lots of moving parts, but the headline numbers are certainly positive.
Well, that brings us to the end of our look at Blackstone's Q1 results. Thank you for joining us today.
Thanks for tuning in.
And once again, if you found this breakdown helpful, please do like the session and subscribe to the channel for more financial analysis. We'll see you next time.